Hello and welcome to CMS Forex News. I'm your market analyst Nick Nassad. Today is Friday, January 9th, 2009. UK manufacturing slid sharply in November, extending the declines in the sector as the economy falls deeper into recession. The streak of 9 straight months of declines is the worst since 1980, and today's monthly drop was the worst since 2002. Industrial production overall was down 2.3%, also a worse than expected result. UK producer output prices were flat in December, a result that was stronger than expected following a drop of 0.7% in November. That put the annual rate at 4.7% from 5.1% in November. That annual fall was slower than we have seen the previous several months as prices tumbled from a peak of more than 10% back in June. Annual core prices remained stable at 5%, implying a level of stickiness to prices. Though with the economy reeling, factories are going to have to discount their goods further in the next year. The price at which UK factories buy materials and fuel fell 2% in December, which met expectations. This comes mainly as the price of fuel decreased. In annual terms, input prices rose 4.3%, but only a couple of months ago, this indicator was as high as 30%. The pound-dollar's advance stalled today following its almost 1,000 pip rise from the start of the week to yesterday's high. The pair flirted above the 1.53 area prior to and after the U.S. non-farm payroll release, which we will cover later. German industrial production fell by 3.1% in November, a larger than expected drop. Production and manufacturing was down 3.5%. On an annualized basis, production was down 6.4%, also larger than the forecast, and the previous month 3.8% drop. The industrial production data, along with factory orders and trade figures yesterday, are showing the German economy sinking deeper into its recession as the fourth quarter went on. On a positive note, German retail sales improved more than expected in November, climbing 0.7% on the month. Consumers were helped by lower gas prices and deep discounts for the holiday shopping season. But with the economic situation continuing to deteriorate and unemployment increasing in Germany, it remains to be seen if this positive result will carry over into future months. Overall, Eurozone retail sales also saw a better than expected result, rising 0.6% on the month. The data is one of the few pieces of news that is positive from the recession-hit economy. It signals that household demand recovered slightly in the middle of the fourth quarter. The U.S. economy shed 525,000 jobs in December, which came mainly in line with expectations. Though it's not a great release by any stretch of the imagination, especially with the unemployment rate jumping to 7.2% and November's figure revised to show a fall of 584,000, the fact that it mainly met expectations and we didn't have any big surprise on the downside was overall a positive for the U.S. dollar. The unemployment rate is the worst now in 16 years, and the economy has lost 2.6 million jobs in 2008, the most since World War II ended in 1945. Nearly two-thirds of those losses, however, came in the last 4 months as the credit crisis and the implosion of the financial system work its way through the financial sector and then into Main Street. The euro-dollar pair saw a significant reaction following the release, falling from 1.37 to 1.35, a change of 200 pips. It's a strange day when a loss of 500,000 jobs is a positive sign, but as the U.S. jobs data met expectations, the dollar saw some strength as a result, at least against the euro. We end the week with the euro-dollar pair more than 450 pips lower than where we started, with key support around the 1.33 area. U.S. equities fell in the morning following the U.S. data as the jump in the unemployment rate and another steep drop in jobs weighed on stocks. This caused a whippy session for the dollar-yen pair, which at first rallied on the fact that the report wasn't worse, reaching 91.66, but then fell 150 pips off that high to test the area around the 90 level. The fall continued the streak seen the past 3 sessions of gains for the yen on risk aversion. The yen's gains were felt very sharply against the euro as the euro-yen pair plummeted more than 300 pips following the U.S. jobs release. The pair has been on a downtrend this week, and that downtrend accelerated to end the week. In Canada, the economy shed 34.4 thousand jobs in December, lower than in November, but it still caused the unemployment rate to rise to 6.6%. The results show that most of the jobs lost were full-time work, as an increase in part-time work offset what would have been an even worse figure. The Canadian housing sector saw the annual rate of housing starts remain near its November level at 177,000. However, building permits, a leading indicator for future constructions, saw a steep 11.8% drop following a 15.7% drop in October, which means new housing starts can be expected to fall in 2009. With oil prices falling as well, the US dollar-Canadian dollar pair rose from recent support near 1.18 to test 1.1950. The greenback paired some of its gains in New York trading, but we look set to end the week entering a period of sideways consolidation. Some important U.S. releases to keep an eye on for next week include the trade balance data on Tuesday, retail sales on Wednesday, producer prices on Thursday, and consumer prices on Friday. And that wraps up this week in the Forex markets. Thank you for joining us here at cmsfx.com. Have a great weekend. I will see you next week.